Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
We're expanding across new frontiers, streaming on Zora and Rumble. On Zora, creativity lives on-chain where every post, drop, and idea can evolve into something of real value. Explore what we're building on Zora at zora.co. And on Rumble, you'll find the space where creators connect freely and conversations grow without limits. Catch our episodes and join the discussion on Rumble at rumble.com. Just hit either platform and search The Edge of Show to find us. Two communities, one mission building the future together.
Hello and welcome to Hot Topics on The Edge of Show. I'm your host, Joshua Krieger, and today we're joined by Brendan from Core. This show is sponsored as part of a media partnership with Energit for the Future of Money Governance in Law Summit held last month in Washington, D.C. Today, we're diving into massive Bitcoin treasuries, government-level crypto adoption, and neobanks evolving into Web3 platforms. This is another production in the Edge of Company, a rapidly growing media ecosystem powering the pioneers of Web3 tech, culture, and innovation. Brendan, it's great to have you on the show today.
Yeah, thanks, Josh. Nice to have met earlier. Excited to dive in and riff on a couple of these topics.
Sounds great to me. Let's start with the hot question. Large public companies that have built their treasury strategy around Bitcoin, like Strategy Inc., are back in the spotlight. Strategy reportedly holds about 650,000 Bitcoin. That's 3.1% of the total supply, and that is a staggering amount by any measure. But of course, size alone doesn't insulate from risk. Recently, Strategy's stock slid about 30% over the last month, in line with the Bitcoin dip. Analysts warn that being big doesn't guarantee stability, and it echoes of past financial crashes that even giants can fall. So I'm curious, Brendan, what your perspective was when this news came out.
Yeah, sure. So I'm not a strategy expert per se or an analyst, like you mentioned, but I've been pretty fascinated with strategy if you kind of worked or been involved with Bitcoin over the past few years. So the TLDR is generally their stock price trades at a higher premium than the Bitcoin price itself. So they have more Bitcoins valued higher than what the actual underlying Bitcoin is. That allows them to issue debt. They can then go buy more Bitcoin and the flywheel continues. What happened over the past month is that premium basically went away. And I think at even one point it traded at a discount, which made people pretty fearful because in a discount, which means they actually on paper have more assets than what the entire stock market cap is. There's a potential that they would actually sell Bitcoin to then buy their stock to get the stock up and trade on par with their Bitcoin holdings. So yeah, this has been pretty interesting as of late. Caused a bit of fear. I think it's been generally a proxy asset for a lot of folks trading in the market to short or hedge their Bitcoin positions, even if they hold ETFs. So that had some impact on this price as well. Generally, I'm not personally too worried. I think they have about 3% of all of Bitcoin's supply right now. I'm unsure if that premium is going to come back. They may have to change or alter their business model, or it's going to be interesting to see where they go. But it's kind of TBD. I think a lot of the FUD or the fear, uncertainty, doubt around, is their business going to collapse or they have to force sell? I don't think any of their debt commitments are really coming up until 2027 at the earliest, all the way to 2030. I think they've got plenty of options and time.
Yeah. So, for not being an analyst, that was pretty analytical.
Yeah, it's something we have followed, I guess.
I think you have to be a little bit analytical to be in our industry because, there's constantly changing winds, if you will. But yeah, I echo a lot of your sentiments. There's been ruminations that the digital asset treasury industry is a bubble. The word bubble seems to happen with everything in emerging tech, not just crypto, that people get really excited about and then they get less excited, right? This has been like a theme for decades, not months, not years, but decades in terms of technology. And there's ruminations that AI is also a bubble, right? The question with these bubbles is, how long do they last? How big do they get? When do they pop? And can they rejuvenate themselves after they do pop? And I don't think people really ever truly know. I would say that the idea of a new industry around sort of digital asset holdings in public companies is a fascinating concept. And I think it's still experimental.
It's interesting, especially if you have a revenue model. I think these other treasury companies that are simply buying Bitcoin and don't have an underlying business or model or strategy, no pun intended, are going to feel a lot of pain.
Yeah. And I think this is true with other types of digital asset treasuries too, the Solana ones, the Ethereum ones. There's a ton one now, and Alpha Ton Capital, and they're really focused on acquiring companies, moving them over to the Ton ecosystem, creating value in that ecosystem. I think that's what it's going to take for these digital asset companies to succeed.
Yeah, I'm aligned. I think some sort of underlying business that's more than just passively holding the asset.
Absolutely. Well, let's move on. Texas actually is becoming the first U.S. state to buy Bitcoin, or has become. Switching gears to the public finance sector, the state of Texas just became the first U.S. state to officially buy Bitcoin for its treasury. The state invested about $5 million via a regulated ETF under a newly created strategic reserve framework. This is pretty big news in my mind. It signals a shifting government sentiment. Crypto is no longer fringe, but a legitimate asset class for public funds. The state reportedly plans to move towards self-custody of Bitcoin over time. So I'm curious, what does this mean in your perspective, Brandon, for institutional adoption of crypto? And do you expect other states or entities, other countries to follow suit? Texas is a big player.
Yeah, let's go Texas. It's awesome. I actually missed this article, so thanks for bringing it up. I think that if you've been following Bitcoin for a while, this has been part of that game theory that folks thought would play out, even if you talked about Bitcoin 10, 15 years ago, that eventually the game theory would be as such that it'd be kind of ridiculous to not have some sort of Bitcoin exposure. And we've seen a lot, first it's this esoteric, asset for crypto devs, and then it's kind of grown from there. It became pretty mainstream with consumers. I think almost anyone would know or have heard of Bitcoin before. I don't know if they would say that about other assets. And then I think with ETFs, it really, I know the community is mixed on the ETFs, but there's no way you can argue that it didn't bring some legitimacy to institutions and larger folks like governments, even if local governments like Texas, to get exposure. So, I think this just shows how early where things are and how much the ETFs really legitimized the asset. Because I think this investment was actually into ETFs for the exposure. Yeah. So to me, this is just an early trend that's going to continue to happen to get some exposure.
Again, we agree. If I had to predict, I would say, Wyoming would be a likely.
Yeah, who's going to buy next?
Yeah, Wyoming, right? You got to think they've always been progressive and Bitcoin policy, but there's some other states as well, that come to mind, like California. On the opposite side of the political spectrum, but
yeah,
they did put their DMV titles on the blockchain, so those are possibilities. And we had some embassies at our event, and they're doing interesting things, like Guatemala is doing various things, but I got to think that, some of these hyperinflationary economies, like, for example, even Argentina, of course, we know about the challenges with Venezuela, but
Yeah.
I think anytime an economy has hyperinflation, I think there's a potential use case for, holding some Bitcoin as a hedge or alternative stabilization mechanism for one's economy. This is dipping the toes in the water, $5 million, but I think it's a really cool symbolic gesture by Texas to say that this is an asset class that we're excited about, and other folks should get excited about this asset class. So this was positive news in my mind.
Hugely positive.
Yeah,
Yeah. And I think the start of hopefully something a lot more.
for sure. Well, let's shift gears to from fintech to Web3 banking. Neobanks are evolving into self-custodial financial apps. So we're seeing another wave in fintech, which is this concept of neobanking platforms that are becoming financial applications. The lines between traditional banking, fintech convenience, and decentralized finance are actually blurring. As more users are looking for custody, control, and crypto native features, demand for apps that combine the usability of decentralization is rising. And this could be a major shift in how users manage money, not just traders and institutions. I remember asking an audience fairly recently how many people use crypto as a payment solution on recently, or even in the last year. And in fact, at a crypto conference, only about 1 to 2% of the audience raised their hands. So I think when we think about how early we are, if we have our industry leaders not yet doing it, and they were embarrassed that they couldn't raise their hands, the ones that did looked around, and my point here is just in jest that, like, we haven't made it easy enough to alternate between traditional and digital payment solutions. But I think the move by Gemini with getting giving Bitcoin yield on your traditional purchases is one step in that direction. There's a lot of these neobanks coming up, not only in the US, but throughout the world. I've ran into a bunch of them in Latin America at recent conferences. So I do think this is an exciting trend that, when you think about mass adoption, you think about credit cards, you think about products like Zelle and Venmo and PayPal and Revolut and Wise, and you think about, why shouldn't there be a combination of a crypto product that works for traditional finance? So you can move money around with a crypto native friend, but you can also send money to your mom.
Yeah. I think you hit on a bunch of really cool points. Before working with Core, I worked in fintech for over a decade. So kind of saw the rise of neobanks and different fintechs come up. And I think it's pretty exciting. I think people always mention this the crypto UI or UX issue, and a lot of people, it's like a cop-out answer on panels and things like that. I genuinely think that this is a really easy way to put crypto to work and get on a crypto standard in day-to-day life. So I've used probably 3 crypto card/neobank products at this point. We're working with a team on one to launch on Core that's going to be Bitcoin focused. I think we can touch on that maybe a bit later. And yeah, to me, it's like a better technology and system, and seamless experience for anyone just trying to get banking on their phone without having to work with these old school, outdated tools that are out there. And then a lot of folks are like, here's an example is like, I'm from Canada, although I talk like someone from the US, but even the banking rails in Canada made it very difficult to build neobank products like a couple of years ago to be on par with the ramps or SMB tools. So a lot of folks didn't even compete in that market because the rails weren't there. Now imagine all these other countries. So when you have a like crypto kind of underpinning this infrastructure, you could launch really anywhere in the world. And to me, there's no middlemen or toolkits or banking infrastructure you have to deal with. And all of them are extracting fees. So I think there's a possibility to build really big businesses here. And that's what I think is exciting. You can build a real revenue generating business with a lot of margin. And then the challenge is going to be acquisition, like you mentioned. How many people are using these today? How many will? And then it's notoriously expensive to acquire customers right now in with these retail fintech companies like Revolut. Like they're competing heavily, and a lot of them don't make money because the cost to acquire is so expensive. So curious to see what'll happen there, because if you just connect an existing crypto wallet, that's really seamless and easy. You don't have to go through do all this application. So I think this is a huge use case. I think it's a great way to bring crypto into the real world and actually use it. And someone who's really focused on Bitcoin right now, very excited about like living on a Bitcoin standard. So storing your Bitcoin, having a Bitcoin savings account that's earning money, taking out a small loan on your Bitcoin, which is growing due to that yield, and spending in stables, and hope, seeing Bitcoin price appreciate over time, earning yield, spending in stables in the real world. I think that's a really interesting value prop that I'm really excited about to see in the world.
I'm excited too. And that brings us to our last hot topic of the day, which is diving a little deeper into CoreDAO, which is a high performance, Turing complete EVM compatible layer 1 designed as a complementary smart contract platform for Bitcoin. And as you mentioned, it sounds like your aim is to extend Bitcoin into DeFi and DApps rather than just compete with it. So it's sort of like a Satoshi plus consensus blends delegated proof of work from Bitcoin miners, delegated proof of stake, and core holders. So core is used for the gas fees, and there's all sorts of potential ecosystem implications as you guys are building things out. So I guess the first sort of thing I wanted to dive into with you is this new liquid staking token that you guys are representing in Core. Can you talk to us a little bit about that update and what the implications are?
Yeah, so I guess if we take a step back, we see a world where Bitcoin's being put to use, right? Bitcoin right now is an amazing asset, $2 trillion plus asset. I don't know what the price is today. I don't look every day, but massive, and generally has sat in cold storage wallets. See a world where folks kind of live on a Bitcoin standard, do things with their Bitcoin, which can't be done on the Bitcoin network itself. You need some sort of scaling solution. So, that's where Core was created. It's meant to be a Bitcoin specialized blockchain. It's full EVM, so you get the contracts, dApps, and everything you're used to on Ethereum. And it's secured by Bitcoin. So you can stake Bitcoin without giving up custody, directly staying on the Bitcoin network using time locks. And then miners secure the network as well with mining hash. So one thing that's interesting is with staking Bitcoin, time locking, and then securing core chain, you earn yield, right? So it's the first time you can earn risk-free yield on Bitcoin. You don't have to lend your Bitcoin out. You don't have to give it to Celsius or something like that. You can just time lock it in your wallet, delegate to a validator on Core, and you're earning Core block rewards. So that brings native yield to Bitcoin for the first time, which is exciting because a lot of people can build on top of that. So we've seen a variety of folks want to launch LSTs, other products that put this yield to use, kind of replicating a lot of things that worked on Ethereum with staked ETH. So that's a use case we're pretty excited about. We have a variety of different builders building LSTs that are tapping into, Core's yield, and we've seen others take other yield approaches too, which is something that Bitcoiners are very interested and excited about right now, is earning some sort of yield and carry on their underlying Bitcoin because they don't want to sell it.
Yeah, I mean, it makes sense in terms of there's been a shift, sort of like, I think my analogy that comes to mind is like online dating at one point was completely taboo, right? Like the idea of like putting your data out there, matching with someone that you don't have a friend in common, right? And in Bitcoin Maxis, we're like have been like the late adopters to online dating, where everyone else had to start doing it and make sure that it was safe before they were comfortable sort of, doing that. Now they're like, yeah, I want some yield too. Do you feel like the shift has happened in the mentality of Bitcoin maxis to a degree that these types of products and solutions can hit sort of mass market? And what I mean by that is the whales are really the mass market, because they're the ones that can make these products as deep as possible for folks like yourself.
Yeah, I think it's still really early, but you can see where the ball is going, or the puck's going, as I'm a Canadian. But
so we're still in
the market's only
dating app days. We have
Yeah, exactly. I think that's only going to grow over time, and I liked your analogy a lot. I'm old enough to remember when that was the case. Now it definitely is the norm. So yeah, I think that's really reflective of where we're at. There's going to be a portion of Bitcoiners that just never want to leave it out of cold storage, and that's fine. But although that cohort's somewhat vocal, or was vocal on Twitter, that's not the overwhelming majority of Bitcoin holders, right? From new funds to potential ETF offerings in the future, et cetera. Everyone's going to want to earn carry on an asset that they're holding. It's just the nature of finance. So really excited to see what kind of use cases are built there.
That all makes sense. We have to wrap up, but is there any kind of quick updates on recent sort of feature launches or partnerships or anything coming up that you can talk to us about?
So I was hoping we'd have something here, which we're actually going to talk about. So maybe this could be an early feed, but really exciting group launching a Bitcoin-focused neobank. There'll be more info next week, but look out for that. Very excited about enabling people to live on a Bitcoin standard, having really access to these consumer tools, and there'll be more news on that very soon. So it was kind of interesting that was one of the topics you chose.
All right, yeah, that was not just pure coincidence for you back there. And you heard it here. We're on the edge. We're not quite there yet, but look for some fun news from CoreDAO.
Yep.
Actually, just around the corner. Where can folks go to learn more about Core?
Twitter is super active. Huge community. Core. So it's Core, CoreDAO _org. So CoreDAO _org. Get all our updates there. Super active. A lot of folks. So check that out.
Well, thanks, Brandon.
Thanks, Josh. It was awesome. Thanks for having me.
Our pleasure.